Hello and welcome to Your Trades the week ahead, and well, what a week it has gone down to be. We consolidated for the large part, but for the large part on Thursday, taking us finally above those shackles of 8,200, and Friday made a brief attempt, Neeraj, at 8,300 as well, but completely fizzled out from there.
Hopefully it's only weekend jitters, and maybe we'll come back strongly come next week as well, Aisha. But yeah, bang ahead of the earnings season. If we needed a good week, we got one.
Yeah, indeed we did. So managed to gain about 58 points on a net basis over the week. It's a 133 odd point gain coming in for the Sensex as well. IT was the one big I saw, but that I'm going to talk about in just a bit. Nice spurts coming in for the entire metal space. So clearly sectorally that continues to be a gainer, with Tata Steel notching up 7.25% gains. Yes, bank held that very nicely. So almost an 8% rally is what you've seen in this banking counter alone for the entire week. Tata Motors, and look what the US JLR sales numbers did to it. The DVR notched up a good 6.5%. ONGC held that very smartly, and Maruti as well, after its monthly sales data, managed a perk up of about 5.5%. IT, that was the sore eyesore, and we're going to talk about it in greater detail in the next half an hour on the show as well. Tech Mahindra, a 4% cut coming in. Infi done 4%. TCS done 3.5%. And then of course there were some blue chip names like an SBI and HDFC as well, which also fell 1.7 to 3% a piece coming in. But Neeraj, all the action this week, as was the case with last week, was all in the broader markets.
Yeah, I mean, there's so much of activity, you can't possibly mark all of them, but I've picked and chosen a few names. So, you know, what the PM did probably brought a lot of focus on NBFCs, and I think I've chosen LIC Housing Finance simply because that corrected quite a bit. But the common perception in the market is that the NBFC margins will come under a lot of pressure, and that led to a fall in a lot of them, LIC Housing Finance in particular. But it brought a lot of cheer to the real estate names. So look at what happened to DLF and a bunch of other names. But again, DLF just depicting what's really been the case for real estate this week. It's been a fabulous week, and DLF is no different. A bit of a comeback trail for a lot of companies, including Delta Corp. I think for weeks and weeks now, this stock has been punished very, very brutally. It's come back with a bang, I think, ever since Rakesh Jhunjhunwala spoke on the channel about Delta Corp as well. Good move for this one. Good moves for a lot of others. There are new highs. So stock like Adi Finecam, a 150 crore company, Atlas Cycles, is up about 9.5% this week. Gloucester and the jute companies clocked in a very strong Friday, and therefore one of these, at least Gloucester, that is hit 52-week highs. So good going for these stocks as well. And I think what was also buzzing in trade was certain OMCs and oil and gas names, so the likes of MMTC and Chennai Petro in particular. This is of course what happened in Friday, but over the week I think these stocks did very well, as did MMTC. For the week, I think they had a fabulous move. The question though is, and which is what we'll post to our experts, is to what is the outlook ahead. So we'll talk to our live guests, of course, but up ahead on the show you'll hear from two very big influential voices, Rakesh Jhunjhunwala as well as Prashant Jain, who will talk about their thoughts and the outlook ahead. Rakesh believes that if we don't hit new highs, we'll be disappointed. Prashant believes investments in fixed income is also a bit of a must. And then of course our live guest, which is Mayuresh Joshi, fund manager at Angel Broking, as well as Dr. C.K. Narayan from Chart Advice. But before we move on to our live guest, I think it's pertinent to hear out from Rakesh Jhunjhunwala, who believes that the markets will overcome small bumps of 2016 like demonetization, will grow at a much faster pace, and he believes that the budget that will come in Feb 1st will be a more market friendly budget, mature, and will not bring in any negative news for the markets.
A friendly budget. I won't say, I don't expect the tax reduction that people are expecting, but a friendly budget which is indicated by the government's concern on market reaction to Prime Minister's statement. So I feel that the government is very much concerned about the reaction to the market, the policies the market likes, doesn't like. Otherwise there is no reason why Mr. Jaitley should come and clarify that there is no proposal to tinker with the direct taxes. So I think we can, I don't know how much of tax relief, I'm not expecting much tax relief in the budget, but I'm not expecting anything which is going to be adverse on the market in the budget. I personally think, see, when demonetization came, it came as a shock. And now as the time to give the money is gone, I think things will normalize far, far faster than what people are expecting. So I see no reason why people will not, maybe some very, very high item, luxurious items, right, may be affected. Surely it's already history. I think the process of normalization, as soon as I think they are feeding 8 to 10,000 crores of money into the economy every day, and they already fed about 5.5 lakh crores. If they feed another 2-3 lakh crores, I think it's going to become normal. See, I don't see any reason why a man would not want to run his industry. The demand, I don't see any reason why demand will not come back.
Well, that's the big bull and the big voice coming in this entire week. Rakesh Jhunjhunwala speaking with your channel, talking about his thoughts on the markets, and he seems pretty bullish. He says that the budget is going to be a friendly one, and he's talked about a fair amount of stocks as well, which we will play out in the due course of the show as well. For now, he is bullish on the prospects of Delta Cup right now in trade. But let's talk about how the week ahead is going to be like. Mayuresh Joshi as well as CK Narayan join in for exactly that. Gentlemen, evening, and CK, first to you. We managed to cross that hurdle of 8250, 8200 thereabouts. What next for us? Do you think we could give a decisive break to that 8300 mark as well, which we did briefly attempt in Friday's session?
Well, I do think that the market is making a fair attempt at staging that breakout. Now, what we have to see is this whole thing in perspective. We had these two big bottoms around 7950, creating what in technical parlance is known as a double bottom pattern. Now, this double bottom pattern gets validated or resolved to the upside only when the peak between the two bottoms is crossed, which was placed at about 8295, and now that has also happened in the last two sessions, where the index has moved up above 8300 and the futures are posted about 8330. So far so good, and this is the main reason why most people in the market are somewhat excited by the fact that we may have put in a low, and that the bad days might be behind us. But at the same time, I would think that the market is at a bit of an inflection point here, considering that the drive upward from the second bottom at 7950, even though in price terms it has been fairly decent, we have added on almost about 350 points from the low. But see, there is lack of momentum on this whole rise, and that is a bit of a worry, because if any up move has to sustain and carry on further past some resistances, it needs to be backed up by solid momentum, which in this case is somewhat meager, and that is why I have my doubts whether this will succeed. I am hoping it will succeed, of course, because I am a bull at heart, and but then I would want to see follow-through action from banks, from other sectors which have heavy weight in the index. I want to see IT stop falling, because that has a big weight on the index as well. So I need to see all these things happen in the early part of next week, and if let's say 3 out of 4 of them happen, then we all can breathe easy and expect that the breakout would succeed. As otherwise, we are going to revisit something like 8200s again.
Okay, I think amongst the big newsmakers, and I think CK referred to it, was the visa scare. Bill targeting H-1B visas to be introduced, or has been reintroduced in the US Congress. I think 2 US congressmen have introduced the bill. It's the first salvo in the battle against outsourcing, quite frankly. It will arguably up the H-1B visa pay requirement from the current $60,000 as well. Brokerages have expressed a bit of a concern, including Citi, as to what it does. But more importantly, I think it just puts another cloud on what's happening. As it is, business seems to be slowing. On top of that, if costs are high, then it might just hit the margins. And we had managements coming in and saying that if it does this indeed come about, it could be a bit of an issue. Mayuresh Joshi, that's the question to you. IT was just looking like making a bit of a comeback in the month of December, and this has come about. We don't know if it's going to happen or no, but does this induce you to hold off investing into IT bigwigs?
So evening, Neeraj. Again, I think over the past 2 months as developments have taken place for the IT sector as a whole, my entire thesis has been there would be better entry points for the IT companies in general. Having said that, the new scare that has probably come through in terms of immigration and H1B, I think that is going to create an additional overhang, as you rightly pointed out. Traditionally, Q3, Q4 are weak quarters. You're not really sure in terms of how consumer discretionary spending is going to pan out, whether you're going to see postponement in terms of spending happening over the next 2 quarters. In terms of Brexit itself, I think we're not really sure whether it's going to be a hard or a soft landing. And in Trump policy making specifically, I think one does not really have the potential to analyze how the numbers will pan out. So in context of all I think the numbers are expected to be extremely soft and tepid for IT companies for Q3 and Q4, and these additional pressures will have margins weighing heavily. So largely, again, I think the results are due over the next few days and weeks. I think it's a better thing to wait out and wait for the results, wait out for management commentary. By that point of time, I think we'll also have some amount of clarity in the direction that the Trump government is moving, specifically in terms of immigration and outsourcing. And again, I think the entire business dynamics are changing for IT companies. The transformation to digital, cloud, I think even that is going to weigh on costs. So my entire premise is that you will get better entry points. Valuations have become attractive for IT companies in general. But again, I think one really needs to wait for results, management commentaries, and you will get better entry points to enter these stocks over the next few weeks. So the structural outlook remains positive over the next 15 to 18 months. But I think you might be able to get stocks at a lower price, in my opinion.
Okay, some more correction to go for Nifty IT, that's the word coming in. But in the meantime, since all the traction was in the mid-cap segment of the market, let's bring on board Avan to talk about all the movers and shakers from within that pocket. Avan?
Well, quite a number of movers and shakers on the first week of 2017. Titan, for one, as management acknowledged that they had the best festive season in the last few years, with the Q3 Tanishq retail growth at around 15%. Goldman Sachs had a buy rating with a target price of 345, saying that Tanishq has the potential to gain further market share. Walkout in focus as the German regulator issued a 3-year EU GMP certificate to the unit. The German clearance will now allow the company to supply APIs across EU, and the plant caters to domestic and European markets, so this came in as a big relief. The jute stocks were on fire after the announcement of the anti-dumping duty by the government. Ludlow jute gained about 10% in the last 5 sessions, and Gloucester had volumes of about 88 tons the last 5-day average on Friday. Rice stocks like LT Foods, Kohinoor Foods and KRBL were active as the Indian government will be sending a delegation to Iran to resume the basmati rice exports. The All India Rice Exporters Association said they are hopeful that Iran will lift the basmati import ban from India that has been in place for the last 4 months. Remember, it's one of the largest importers of Indian basmati rice. And you had Just Dial, which was on a tear this week, as it will be mulling the demerger of Just Dial Global on the 17th of January.
Thanks a lot for that, Avan, and that's a bunch of stocks which were active. What I think we should do is take a very quick break. But remember, we were talking about how Delta Corp has been on a bit of a comeback trail. Here are what Rakesh Jhunjhunwala had to say. He, of course, kept his positive bias on the stock in spite of the big demonetization move.
I'm told Delta is getting a lot of collection. I don't know, but you go to I'm told if you go to the casino, it's full. There's no place to stand. So people in the Western world, everybody gambles with a credit card only. Boss bar, brothel and casino. You open it and the public comes.
Alright, back with your trades the week ahead and in conversation with our experts. Remember, there are some key earnings next week. We actually kickstart the earnings season with full gusto next week, including IndusInd Bank, that is early in Tuesday, and then of course the IT sector companies, Infi and TCS, which come out with numbers as well. I think a lot of focus on actually something beyond earnings, but this is something important. Anyways, it's a muted quarter expected from the IT names. So Mayuresh, therefore it makes IndusInd Bank all the more important. Comes out with numbers, and banks too will be a very interesting bunch of companies this quarter for sure. What do you expect from IndusInd Bank?
No, again, largely, Neeraj, expectations for IndusInd Bank have always been very, very consistent in terms of loan growth as well as their asset quality. But again, with demonetization, how much impact has it had on credit growth is an important aspect to be seen, and specifically in terms of its CV/PV portfolio. So largely, again, I think expecting a stable set of numbers to probably come through on all parameters that the bank operates out of: stable loan growth, stable asset quality, NIMs expected to be stable as well, in my opinion. Again, I think the price to book parameter that IndusInd Bank has traded has always been at a premium, but for rightful reasons. So I'm not expecting any negative results from IndusInd Bank per se in this quarter.
Okay, that's the take on IndusInd Bank, though most crucial would be IT perhaps, given the kind of weakness and negative sentiment which is prevalent on the sector as we step into earnings come next week. But CK, I want to come to you. What stock ideas are looking attractive at this juncture?
Well, I think you need to really pick and choose in this market where things are changing quite swiftly. I think one of the stocks which is been on a consistent drive upward is NMDC. The stock is actually staging a big pullback to that big decline we had. It made its high, most recent high at about 195 back sometime in June 2015, and has been undergoing a reaction which brought it down as low as 72, and now there's a pullback going on from it. It's come up to about 135 levels now, seems to have legs enough to carry on from a trading perspective till 145. But I think if you look at the overall picture and look at the overall momentum, I think you will find that if there is a breakout past 145, then there is room till about 170, which I think, given the momentum in the metal space and the kind of following that the stock has got, I think NMDC has got enough legs to go till 170. Mind you, this will be a multi-week trade and not something that I'm talking about for Monday. So NMDC is something which positional traders can have as a buy. The second one, I'm going into the small cap, mid cap area. I think Stellar Technology is something wherein a breakout has been building up for a very long time. The stock was in a range between 70 rupees to 100 rupees, has been there for the past few years actually. And now it's actually challenging the higher end of that range at about 100, 102, and it's starting to close above into those zones. And I think that's a very positive development as far as Stellar Tech is concerned. The news flow in that particular stock is very good. The kind of players who are getting into it is also quite positive. The chart patterns are consistent, the volumes are decent, the momentum is picking up. So from all angles, if you look at it fundamentally, technically, momentum wise, etc., I think Stellar Tech makes a great case for the medium term kind of investment. I would think in the short term you can look at 120, 125, and in the slightly medium term, if you were to hold it for about 6 to 9 months, you can even look at about 145.
Okay, gentlemen, thank you so much for joining us on this leg of your trades and giving us your thoughts and your recommendations as well. But I'm afraid out of time completely, but this is all that you need to know to prepare yourself for trade next week. So it's a goodbye from both me in Bombay and Aisha in Delhi. And as we leave you with one more very important voice, and that is India's top fund manager Prashant Jain, who shares his top sectoral bets for 2017.
Yeah, yes, to target double-digit returns, I think equities are probably the only meaningful option today. And the only sector I think which will have to change the way it does business is non-banking financial companies, because POS transactions and POS machines are going to become a way of life. And once POS is established, even both in the small establishments and larger establishments, it is already there. It would be a significant competitive advantage for the banks. And so that is, I think the banks are gaining competitive advantage at the cost of NBFCs.
It is missing, Prashant. The argument is that, okay, I may have a great liability franchise, but I am not in the business of collecting deposits. I also have to lend intelligently. And for me to lend intelligently, there has to be an offtake, which is not there.
Yes, so you are right. For the current year, the credit growth is much less than what was earlier envisaged. But I don't think the situation will remain like this for
Why do you say
ever. Because retail is growing. Retail continues to grow. On the capex side, we are seeing good action, good movement on the roads. Railways, you will see current year itself, there is very good progress, and that should continue to gain momentum over next 2 years.